Ladies and gentlemen, what I'm about to show you didn't make headlines. It wasn't on CNN, it wasn't trending on Twitter. But it's the single most important financial event of the decade. Last week, the US Treasury Department released a document that most people will never read. It's called the Treasury International Capital Report, the TIC data. Boring name, dry statistics. But buried in the footnotes of page 47 is a number that changes everything. $688 billion, that's how much US debt China holds right now. And if you think $688 billion sounds like a lot, you're missing the point. Because 12 years ago, China held $1.32 trillion in US Treasury bonds. Do the math. China has liquidated $632 billion, nearly half their position. They didn't do this slowly. Over a decade, they accelerated. In the last 18 months alone, they dumped over $180 billion. And here's what nobody is telling you. They're selling at a loss. When bond prices are falling and you sell anyway, you're not managing a portfolio. You're executing an exit strategy. This isn't about economics. This is about war. This is about China systematically removing every dollar they can from American control before the shooting starts. In this video, I'm going to show you exactly what China is doing with that $688 billion they pulled out, where the money is going, what they're buying, and why this tells us more about the timeline for a Taiwan conflict than any aircraft carrier movement in the South China Sea. Because when a superpower starts converting paper wealth into physical survival assets, they're not rebalancing, they're preparing. Let me show you the exit strategy nobody saw coming. But first, you need to understand why selling at a loss is the biggest signal of all. When you own a financial asset, stocks, bonds, real estate, and the price goes down, you have two choices. You can hold and wait for the price to recover, or you can sell and take the loss. Rational investors hold. Why realize a loss if you don't have to? Why turn a paper loss into a real loss? You only sell at a loss under two conditions. Condition one, you desperately need cash. You're facing bankruptcy. You have to pay bills immediately. Condition two, you believe the asset is about to become worthless. So taking a 20% loss today is better than a 100% loss tomorrow. China isn't facing a cash crisis. Despite problems in their real estate sector, China runs a massive trade surplus. They earn over $800 billion per year, selling products to the world. They're swimming in cash. So why are they selling US Treasury bonds at a loss? Because they believe those bonds are about to become a liability, not just worthless. Let me show you why. February 24th, 2022, Russia invades Ukraine. Within 48 hours, the United States and European Union freeze $300 billion of Russian central bank reserves. These weren't private assets. This was the Russian government's money sitting in accounts in New York, London, and Brussels. Money they thought was safe, untouchable, sovereign reserves, gone, frozen, confiscated. With a few keystrokes, China watched this happen. And they learned a terrifying lesson. Any dollar-denominated asset we hold in the Western financial system can be seized the moment we do something America doesn't like. When, not if, when China moves on Taiwan, or when the South China Sea conflict escalates beyond skirmishes, the US will do to China exactly what it did to Russia. Freeze, confiscate, weaponize. That $688 billion China still holds in US Treasury bonds, the moment sanctions hit, it becomes $0. Instantly. Legally. Permanently. So China is getting out. They're willing to take a 15% loss today rather than a 100% loss tomorrow. This isn't portfolio management. This is financial warfare preparation. They're clearing the battlefield of assets that can be used against them. And the speed of the exit tells you the timeline. Now let me show you who's being forced to buy what China is dumping. When the second largest economy in the world dumps $632 billion worth of bonds onto the market, basic economics says prices should crash. When supply floods the market and demand disappears, prices fall. In the bond world, when prices fall, interest rates spike. If market forces worked freely, China's exit should have pushed US Treasury yields to 6%, 7%, maybe 8%. That would be catastrophic. Mortgage rates would explode. The US government couldn't afford the interest on its debt. Regional banks would collapse, but that hasn't happened. Yields have risen, but there's been no collapse. Why? Because someone is stepping in to buy what China is selling. And when you look at WHO as buying, the picture becomes clear and terrifying. The United Kingdom. According to the same TIC data, UK holdings of US debt have surged to over $750 billion. That makes the UK the second largest foreign holder of US Treasury bonds, right behind Japan. Think about that for a second. The UK economy is 1/16 the size of China's economy. Britain doesn't run a massive trade surplus like China did. In fact, the UK runs a trade deficit. So where is Britain getting $750 billion to buy US debt? They're not. They're borrowing it, or they're using financial engineering through the City of London. They're leveraging their own balance sheet to act as a shock absorber for the US Treasury market. Then there's Belgium. Belgium's holdings have jumped to $370 billion. Does the Belgian government suddenly have hundreds of billions in spare cash? No. Belgium is home to Euroclear, one of the world's largest securities depositories. When you see Belgium buying US debt in the TIC report, it's rarely Belgium. It's other central banks and sovereign wealth funds routing purchases through Euroclear to hide their identity. This is what I call the Bagholder alliance. The United States is pressuring its allies, UK, Belgium, Japan, others, to absorb the supply that China is dumping. It's not a free market decision. It's geopolitical arm twisting. Washington is telling its allies, China is leaving. If you don't step in and buy this debt, our bond market breaks. If our bond market breaks, the entire Western financial system collapses. And if that happens, we can't protect you anymore. It's financial conscription. The allies are being forced to drain their own liquidity to keep the US system afloat. But here's the fatal flaw. The UK and Europe don't have China's capacity. China could buy forever because they were earning real dollars, selling real products. The allies are buying with borrowed money. This creates a fragile system. If the UK economy stumbles, like it did during the 2022 pension crisis, they'll be forced to sell US Treasuries to raise cash. And when that happens, the bid of last resort disappears. China understands this. They're playing a game of attrition. They're bleeding the West dry, $1 billion at a time. So where is that $688 billion going? Let me show you the shopping list that reveals China's war plan. When China sells a US Treasury bond, they get paid in US dollars. Digital credits in a custodial account. But China doesn't want dollars. Dollars are traceable. Dollars can be frozen. Dollars can be inflated away. So what are they doing with $688 billion in proceeds from bond sales? They're converting paper claims into physical reality. They're engaging in the most aggressive commodity hoarding campaign in modern history. While Western analysts stare at stock tickers, Chinese state-owned enterprises are swallowing record amounts of raw materials. This isn't commercial inventory. This is strategic stockpiling for war. Let me show you the 4 categories. Category 1, the golden pivot. The People's Bank of China has been buying gold for 19 consecutive months. Officially, they've added over 400 tons to their reserves. Unofficially, the Shanghai Gold Exchange withdrawal data suggests the real number is much higher, possibly over 1,500 tons. They're using dollars from bond sales to buy gold on the London and Swiss markets, then shipping it east. Why gold? Because gold has no counterparty risk. It can't be frozen by the SWIFT system. It can't be sanctioned. When you convert US Treasury bonds into gold bars sitting in Shanghai, you've moved your wealth outside American jurisdiction permanently. Category 2, the energy lifeline. China imports 70% of its oil. In a war, the US Navy could blockade the Strait of Malacca and strangle the Chinese economy within weeks. To counter this vulnerability, China has been buying record amounts of crude oil. They're paying sanctioned nations like Iran and Russia in yuan, bypassing the dollar entirely. But here's the critical part. They're not burning it. They're storing it. China's strategic petroleum reserve is now estimated at 1.5 billion barrels, a combination of commercial and government stockpiles. Satellite imagery shows massive new storage facilities and underground caverns being built. 1.5 billion barrels would allow China to survive a complete naval blockade for 12 to 18 months. That's not a commercial decision. That's war preparation. Category 3, the metal mountain. Here's the most telling indicator. China's property sector is in depression. Real estate construction, historically the biggest consumer of copper, is down 40%. And yet, China's copper imports remain near all-time highs. They imported 28 million tons in 2024. If you're not building apartments, why do you need so much copper? Because you're shifting to a war economy. You need copper for military equipment and munitions, electrical grids to reduce oil dependence, electric vehicles and drones, and naval shipbuilding. China is also hoarding lithium, cobalt, rare earth elements, the building blocks of 21st century military technology. They're cornering the market on the physical inputs of modern warfare. Category 4, the food fortress. China produces 20% of global GDP, but has only 7% of the world's arable land. Food is a strategic vulnerability. According to the US Department of Agriculture, China now holds 60 to 70% of the world's corn and wheat reserves. They have enough grain stockpiled to feed 1.4 billion people for over a year without a single import. They're trading bond yields for calories. A nation planning to remain at peace keeps wealth in efficient interest-bearing assets like treasury bonds. You chase the highest return. A nation preparing for war converts wealth into inefficient physical stockpiles. Holding 500,000 tons of copper pays no interest. In fact, it costs money to store. It has negative yield. But it has infinite return on survival. This is why they're willing to sell bonds at a loss. They're trading fake wealth that can be frozen for real wealth that can be burned in an engine or fired from a barrel. Now let me show you the timeline this reveals. And it's shorter than you think. It's not just that China is selling. It's how fast they're selling that reveals the timeline. Let me show you the pattern. 2013-2019, China's holdings declined slowly, dropping about $50–80 billion per year. This looked like normal portfolio rebalancing. 2022, the selling accelerated to $100–120 billion per year, still manageable, still explainable as diversification. 2023-2024, the pace exploded. China dumped $180 billion in just 18 months. October 2025 alone, China shed $12 billion. This is not gradual rebalancing. This is systematic liquidation with urgency. When you're trying to hide your selling to avoid crashing the market, you go slow. You sell in small chunks over years. But when you're more concerned with getting out than with market stability, you accelerate. The velocity of China's recent sales suggests they're less worried about taking losses and more worried about running out of time. Time for what? Let me connect the dots. Military modernization. China's navy is now the largest in the world by ship count. Amphibious capability. They've built the fleet needed for a Taiwan invasion. Commodity stockpiles. Gold, oil, copper, food at record levels. Financial decoupling. Removing assets from US jurisdiction at record speed. You don't build this infrastructure for deterrence. You build it for use. The acceleration in bond sales suggests the timeline for Taiwan has compressed from someday to soon. I'm not saying it happens next month, but when you see financial preparation happening at this speed, when you see a country willing to take billions in losses to get liquid fast, you're watching the countdown to something irreversible. So what do you do when the second largest economy is preparing for war? Here's the protocol. Most investors are sleepwalking into a crisis. They own safe assets that are about to become weapons in an economic war. Here's what you need to understand. The US Treasury bond is no longer a risk-free asset. It's a political football in a global conflict. Let me give you a 3-step protocol. Protocol step 1, shorten your duration. Duration is how sensitive a bond's price is to interest rate changes. Long-term bonds, 20-year, 30-year Treasury bonds, have high duration. If rates rise 1%, a 30-year bond can lose 20% of its value. As China exits, and if the Bagholder alliance breaks, long-term rates will spike, long-term bondholders will be massacred. If you want safety in bonds, stay ultra-short. 1-month to 6-month Treasury bills. They have almost zero duration risk. They act like cash. Don't lock your money up for 30 years with a government fighting an economic war. Protocol. Step 2. Follow China's playbook. China is selling paper to buy physical commodities. You should consider the same. Your portfolio needs exposure to energy, oil, natural gas producers like Exxon, Chevron, metals, copper, silver miners like Freeport-McMoRan, First Majestic, gold, physical gold or gold miners like Barrick, Newmont, agriculture, farmland, agricultural commodities. Why? Because when the dollar loses reserve currency status, and China's exit is accelerating that process, the value of stuff goes up while the value of dollars goes down. Protocol step 3. Watch the allies. You need an early warning system. Monitor these indicators. British pound. If the pound crashes below 1.20, it means the UK can't sustain buying US debt. They'll be forced to sell to save their own currency. Japanese yen. If the yen crashes to 160 or beyond, Japan will have to sell US Treasuries to defend their currency. Japan is the largest foreign holder. If they join China in selling, it's game over. 10-year Treasury yield. If it spikes above 5.5 to 6% suddenly, it means the Bagholder alliance is breaking. The Fed will be forced to intervene with money printing. These are your tripwires. When they trigger, the crisis goes from slow motion to fast motion. 688 billion. That's not just a number in a government report. That's a countdown clock. China has liquidated nearly half their US Treasury holdings. They've taken billions in losses to do it. They're converting paper wealth into gold, oil, copper, and food. This isn't portfolio diversification. This is war preparation. The divorce between the US and China is final. We're just waiting for the house to be sold, for the last assets to be divided, for the final separation. The mainstream media won't tell you this until it's too late, until tech stocks have crashed, until your retirement account has been decimated, until the crisis is unavoidable. But you're not most people. You watch this video. You understand what's coming. The question is, will you act? Will you get out of long-term US debt? Will you follow China's example and move into physical assets? Will you watch the warning signals? Or will you hope this resolves peacefully? Hope the dollar stays strong? Hope somehow the system holds together? Hope is not a strategy. Preparation is survival. China is clearing the decks. The Bagholder alliance is straining. The timeline is compressing. You have a window, weeks, maybe months, to position yourself before this goes from financial crisis to something far worse. Hit that subscribe button because I'll be tracking this situation daily. The next video will show you exactly which commodities China is hoarding most aggressively and why those are the ones you need exposure to. Share this video. Your friends and family need to know what the $688 billion exit really means. The government won't tell them. The media will downplay it. But you can warn them. The exit is accelerating. The war preparation is obvious. And your financial future depends on understanding that $688 billion isn't just money moving, it's a signal. The signal is clear. The question is whether you're listening